Hello, my name is Richard Candia. I'm a realtor with BoA, and this is Real Estate Kendall and South Dade. My intent is to bring professionals, thought leaders, business owners, and community influencers that work, live, or in some way impact our community of Kendall and South Dade. Today I'm happy to bring my friend Russ Foster. Russ is the Vice President for Business Development in the Southeast region of the United States with Bank of America. We're going to talk about how he sees the market is moving and how Bank of America can help buyers and sellers alike. Russ, thank you.
Richard, great to be
I'm
here.
Really happy you're here.
It's great to see you again, my friend. Thanks for having me.
Now you're going to think twice about visiting my property. So let's go over some numbers. I've got
sure.
my glasses here. Last week, the 30-year mortgage rate was 6.8%. It increased about 1.5 points from last year, but only 0.03 from the week before.
Right.
In Kendall, I'm just throwing some facts out to you.
Sure.
Kendall South Dade is comprised of about 21 zip codes. In those zip codes right now, there's 909 single-family, 910, I just put up the listing.
Okay.
910 single-family listings and 402 listings of condo townhomes. It sounds like a lot, but I said 21 zip codes. There's a ton of people in those zip codes, so I can tell you that that's probably a little less than last year.
Sure.
Now we going to counter that with the U.S. economy growing 2% GDP during the first quarter of 2023.
Right.
And unemployment rate is at a 4%, which really is zero.
Yeah.
Right. And I can tell you Dade County is about that as well. So react to that. Give me a reaction to that.
Well, I think overall, Miami is indicative of what we're seeing in a lot of places. Again, as you mentioned, I work in the Southeast. Some major markets in that jurisdiction, if you will, from Charlotte to Atlanta, Raleigh, and of course everything here down in Florida. The U.S. economy, contrary to where a lot of the press has been, is still very strong. This was supposed to be the year of recession. Yeah. It was supposed to be, this is where, it's doom and gloom. This increase in interest rates by the Fed is going to eventually, while it had a very positive effect as far as inflation goes, it's going to kill the real estate market. It's going to hurt jobs. It's been quite the opposite. As you mentioned, in fact, in May alone, the U.S. economy added 339,000 jobs. We have almost no unemployment in this country, and in fact, we're continuing to add. We have a 7-year backlog, Richard, of people who are trying to become citizens of this country, but we have a lot of problems. We're open for business in the United States, and as you know, as far as the world goes, the United States goes. We pretty much are the bell cow for all of that. So I think that it's very robust. The problem that it's creating, some of the statistics you gave, you're right, inventory continues to be an issue. If you have 909 listings, 910 total listings in South Florida, in those 21 zip codes, it's not of an abundance really, and it's challenging. So you're continuing to see people fight over good properties, ones that are price fair, and there's an affordability issue. If there was one thing that I think hurts this neck of the woods, if you would, for that kind of vernacular, it's affordability. Miami continues, Dade County, Broward County, very expensive to own a home. And eventually, that's where I see potentially some of the problem being with this part of the world, is affordability.
Well, that kind of leads into the comment that I was making to you, that one of the common refrains of why there's a lack of inventory is because people have locked into low interest rates. And I think the vernacular is, when we talk about low interest rates, we're talking about 2 or 3 years ago, the really low interest rates.
Right.
Prior to that, interest rates were right about where they are now.
Sure.
Okay, and 10 years ago, if the person keeps their home an average of 10 to 13 years, 10, 13 years ago, it was about the same thing now.
Absolutely.
So it's not the interest rate.
No.
It's not the interest rate.
It really isn't, Richard. And for old dogs like us who remember back in the day when you had double-digit interest rates when you're trying to purchase a home, these historically are not at all-time highs. Quite the contrary. You were right. It was more an anomaly, what we saw 3 years ago, where something was going below 3%. Well, that's almost ridiculously free money. And we get that. But like a lot of consumers, it's a short-term memory sort of thing. But I still feel that the interest rates, like you said, 6.81% here recently, still pretty affordable. As long as the housing prices don't continue to escalate and escalate and escalate, that eventually will create, a diminishing return. So as long as home prices don't go absolutely through the roof, interest rates should not be, and affordability ergo would not be a problem either.
Right, and for the purposes of this conversation, we're not going to go into the luxury market, which has become crazy, and then it's slowed down, but it's still with numbers that we can't even.
Right.
Let's talk a little bit about what you do, like how many markets that you carry in your role. And what do you think of, you've already kind of touched on it, what do you think about the South Florida as a whole?
No, I'm very fortunate at the bank to really, if you were to start the Mendoza line at Charlotte, North Carolina, and go south, I cover everything from Tennessee all the way through Georgia and all of Florida and that part of North Carolina, South Carolina. So pretty big swath of dirt.
And your whole region's doing very well as far as their economies.
Very strong.
Yeah.
Extremely strong. I have some of the most prominent and fastest growing markets in my dirt. Charlotte, Raleigh, Nashville, just absolutely exploding. And then you look at, I wouldn't put, Miami has been, it's remaining steady, but there's other parts of Florida that are continuing to explode. Tampa market, St. Pete, all those areas up and down. Just again, it kind of goes back to, to segue into your next question. What does it look like down here? It's about affordability. A lot of those markets still, they're starting to reach a crescendo of prices, but still very affordable, still a lot of opportunity. When you ask me about South Florida and what I'm seeing, because to be completely candid with you, Richard, I would probably say 80% of my dealings are going to be in South Florida.
Wow.
The bank looks to this because this is a very important market for us. So I spend a lot of time down here. What I'm seeing, while the economy, I think, is still strong and people are still working, the issues I see, again, go back to that word of affordability. It is challenging for, let's just say, the average person with an average median income, let's say even of $100,000. The area median income is around $65,000 here in South Florida. Mm-hmm. Think about what that can really buy you. Unless you're going into a condo sort of situation, you might be able to find a price point where you have, but then taxes, insurance, the issues that you face here are things that no other market would find in this country in South Florida. And predominantly that insurance piece is a huge part.
People keep on coming, and which is a blessing at the same time. Well, the region you represent, the region that you work, is diverse in of itself.
Oh, for sure.
But the other things we were talking about before we started was how diverse South Florida is. Hialeah is different than Kendall, is different than South Beach, is different than Alapata, and they're all different than South Dade. How does Bank of America, how do you, when you talk to your lenders, to your branches, your managers, how do you encompass that diversity?
You have to be the king. You have to be the chief of your tribe. You have to be the king of your kingdom. Every financial center that we have here in South Florida, and really throughout the entire footprint of Bank of America, we let our leadership own their particular territory. Mm-hmm. That means know your constituents, know the people that are coming through those financial centers. Your viewers may be interested to know, Richard, you know that at Bank of America, we have more people that come through our financial centers on a daily basis that go through Walmart or Starbucks.
Did not know that. More than Starbucks, really.
We have tremendous foot traffic, and it is incumbent upon all the leaders of those particular financial centers to own that, know their constituents, know what their lending needs are, know what, quite frankly, even down to the languages they speak. we try to really be very prescriptive in every single market with who our leaders are and how we handle our customers, and that will not change.
Your branch managers are resources then, because if all that traffic is going through them, then people like me should get to know those branch managers and say, hey, what are you seeing? What are you,
To bring this back to a macro view, that is the philosophy of Bank of America, to be honest with you, is to handle our financial centers as our customers. That's where everything gets triggered off of. It's no different than any other banking model that's been around since the dawn of time. The more accounts that you have with the customer, the more likely they are to stay with you.
Right.
And those cross-selling opportunities for us are very robust, especially in South Florida. Our base of credit card account holders, auto loans, we have a huge market share down here, and it continues to grow.
And your challenge is not any different than any other big company. I've got them here. Let me try to keep them before they. Okay, so it's really just like any other business.
The more tentacles you have, the better off you are. That's right.
Let's go through a couple of things here. How can Bank of America help individual first-time homebuyers? And I know there's a program we wanted to talk about.
Well, we're very, very proud of a $16 billion initiative that Bank of America put forth going on 5 years ago. It's our community affordable loan program that we're put forth to really everyone across the country to really try to make home ownership a reality for all Americans. We understand that the biggest impediment to owning a home, Richard, usually is the down payment that someone has to come up with. Mm-hmm. You think of rental prices and other things that we have just ongoing. Most people have to live day to day, paycheck to paycheck, and it's hard to sock away that money to be able to put down that first initial chunk to get in the house. So our community home ownership commitment is a $15 billion commitment we've made at Bank of America to help Americans make sure that home ownership is something that's tangible to them. We do that in the form of grants that we will give in the form of a down payment assistance or closing cost abatement. These are programs that the borrower does not have to pay back. They are true grants that we give to our clients. And in a place like Miami, for instance, you can get anywhere from $10,000 to $15,000.
These are specific properties determined by census?
Yes, you're exactly right. There are some parameters around it. I would just basically say, in a nutshell, we do look to purchase or have a purchaser in an area that we consider multicultural.
Talk to your favorite realtor who looked up.
100%. We want to make sure that is available to everybody. So we try to partner with people like you.
Yeah, okay, that's good. And overall, the role of Bank of America as an industry leader, I really like the point about all that traffic that makes the branch manager really almost the mayor, if not the mayor, then the chief of staff of the mayor in whatever town they are at.
You got it.
And you see that type of activity throughout your region, throughout?
100%, and even more so. I would say South Florida by far has the most traffic that you'll see. Atlanta gets a lot. We have a lot in Atlanta as well. Major cities, major. It may surprise you that people still go in and like to see a physical check. They like to actually hand it to a teller. And while we admittedly are trying to kind of move more to a digital platform, we still see people who like to, be nose to nose and toes to toes when they do business.
Small businesses, big. I mean, there's a role for that.
There is. There is.
I want to end by saying Denver is the favorite city that I've not visited. We actually have a friend of Miami. I told you Javier Soto runs the Denver Foundation.
That's right.
So I want to do a little shout out to him here.
Yeah.
And I think that's really what I wanted to do. I wanted to introduce you to the people in South Dade and Kendall. You have very prominent branches in Kendall. My wife and I are clients of yours, and I think behooves everybody to get to know the local branch manager and just
Yes.
have a conversation with them, no? They're accessible.
100%. That's exactly what they live to do,
Mhm.
and we try to be that perennial one-stop shop that you can always stop in and for all your financial needs, and to make homeownership something that's tangible. And if needed, Richard, please feel free to extend my personal information on to your viewers as well, because I'm always be accessible to them as well.
That's probably really, really kind. Let's go eat.
Okay.
Thank you.